Hey everybody, Economic Ninja. I hope you're doing great. It's a beautiful sunny day in California. I think it's gonna hit 78, 80 degrees. Oh, it's awesome. I'm gonna work outside. Just got myself a new tractor and I'm gonna go out and plow a field. When I say a field, I live in a small house with a small backyard, so I'm gonna drive 20 feet straight. I'm gonna drive 20 feet backwards. I know I'm crazy. I'm gonna put it on video. We're gonna talk about the mortgage industry. You guys know that there is about to be blood in the streets, especially with mortgage brokers. Mortgage brokers are about to have a very interesting time. We haven't seen anything like this since really 2015 to 2017. We saw a major slowdown in refinancing because interest rates were going up. The Federal Reserve started their dot plot plan and refinances fell off a cliff. It really happened back in 2005. And the reason why is because by 2005, the Fed had another dot plot plan and they were bringing rates up. And they brought it up a few percentage points. They actually brought it up. The Fed funds rate went up something like 4.5%, 5%. That was a huge, a dramatic increase over the period of about 2.5, 3 years. And it pushed us into a recession, the Great Recession, actually. Well, to say that interest rates and mortgage rates have gone up a lot in the last 120 to, let's say, 365 days is staggering. We have seen about a 35 to 38% increase in the interest that you will pay on a mortgage, because 30-year fixed rates went from about 2.95% to the other day when I saw it crest 4.25%. So it means that people are going to be out of the refi market unless they're very desperate and need cash. I mean, they're going to be paying a lot. I mean, 4.25% wasn't even a cash out refi price. So that's going to take a lot of mortgage brokers by shock. I have a feeling it's almost going to be like the light switch went off. Another thing is that people, home buyers that are buying it, not funds, hedge funds that are coming in with these all cash offers, this is going to price so many first-time home buyers. I wouldn't be surprised if 90% of first-time home buyers you'll see within this 60-day period that we're in right now completely stop. Just frustrated buyers. Not only are they being outbid on homes because of record low inventory, and that's a telltale sign that we are at the top of a real estate market, but also they're going to be frustrated because the cost of that loan servicing is just going to go through the roof. Okay, so we are at a serious inflection point. Not only that, people know the Fed is about to start raising interest rates. So I think it's going to knock out the rest of those home buyers, and it is going to be Armageddon in the real estate markets. Now, I've been talking about this for quite some time, and I know locally where I live, I've ran into real estate agents, very successful real estate agents that are following the channel. And I shout out to you guys. Thank you so much. And to all the real estate agents following, shout out to you guys. I want to give you guys a word of wisdom. It's time to start working on REOs. Start looking into that, because not only, there's so many real estate agents that are quitting right now. Yet another sign that we're at the top of the market. Why? Because real estate agents, a lot of them are not getting listings. Remember, if we have a record, there's always a certain pool of real estate agents, right? It shrinks and it expands, all right? It shrinks like right now because there's such record low inventory. There's not enough inventory to give every real estate agent a piece of the pie or their own listing, right? What happens is you have very successful real estate agents, whether they be because they're fake and they drive, Range Rovers and they got fancy clothes and they've got the expensive ads. So certain demographic of property owners want to use them, right? They're successful there, or they're very successful because they've been doing the business for quite some time and they're very impressed. Guys, and don't hang up on this, because I've got an amazing comment that I'm going to pull up. I'm going to grab it right now, actually. That I saw from a real estate agent that's been in the business for over 30 years. So my point being is that with, the successful real estate agents, whether they've been in the business for a long time and they have amazing knowledge and they're just out there crushing it, so they get tons of business, or the people that are fake, those agents are out there too. And they they farm out most of the work to transaction coordinators, things like that. What happens is the people that have just started in the business, or the people that are just doing it as like a side gig, side hustle, they are not getting a lot of of listings, so they're leaving in droves. Well, we saw this exact same scenario play out in mid-2006, and it's happening now. So, okay, I want to bring up this comment, and I think it was just phenomenal. Let's see here. Sorry for the thing. I just had this thought. I think it was so darn good. All right, here we go. This is from Richard, and Richard threw this comment in the other day on one of the real estate videos. I want to read this. Okay, Richard, here we go. 34 years as a full-time realtor in the high desert of Los Angeles County, 65 miles to downtown LA. Now, a little break real quick. That's a good market, okay? That's a high desert in hot markets is a big market because especially, you know, as markets rise, you have people start to move a little farther out into the suburbs, especially around San Francisco, the Bay Area, Los Angeles, things like that. So it's a good sized market. Okay, he said the peak of August of 1989 to the low of 1997, okay, about a decade, they saw a 50% drop. We did not recover the peak 89 prices until August of 2002. From that peak, and that's when I started investing. I was investing in the year 2001, okay? And I started buying real estate up like crazy because as interest rates dropped, I knew people would get greedy and bid up real estate prices. So they didn't recover till August of 2002. From the peak of March 2007 to the bottom of 2009, we lost 66% in home values. The previous peak in September of 2020. So wait, hold on. I apologize, I messed up. So he said when they lost 66% in home values, most of the drop was in the first 18 months, and that is correct. It was a pure panic. People were liquidating as much as they can. Banks also had to foreclose on a bunch of people, and they were pushing that inventory onto the market. To say it was brutal is an understatement. We only went over the previous peak in September of 2020. All right, so just recently, guys. Amazing what happened after the interest rates dropped to 2.5%. As for rentals, the investment firms always forget that rents will drop dramatically if housing crashes, as new investors can afford lower rents and will take the highest qualified tenants from the people who need to get a higher rent. I believe we will see the fourth major drop in my life. The first one was in the late 70s when my parents were in real estate in the Carter times. And he said, thank you for your videos. Richard, thank you so much for your support and amazing comments like that. What he brings up is an incredible point, and this is going to decimate the rental property market as far as the people that aren't seeing the big picture. And what he says right here, the investment firms always forgot that rents will drop dramatically if housing crashes, as new investors can afford lower rents and will take the highest quality tenants. So I actually have a story about that. So when I was buying real estate, as the market was crashing from the dot-com bubble, I was able to go out and buy these properties that were distressed. And since I bought them the right way, right? I was buying a lot of homes zero down. I was immediately walking in and I was able to be able to cash flow, let's say 10%, let's say 10% over my expenses. My cash on cash was a lot higher, but I was able to secure great tenants that came in with amazing qualifications, income, things like that, credit scores, and they would move to my properties because I was able to ask less. And I had a line of people out the door with applications because I was asking a little bit less than the market rents, and the properties were very clean. So people were relocating to my property. That exact scenario happened. Well, if investors or funds had been buying up at the previous highs, they have to maintain their rents high. So what happens is these new investors that walk in and go, hey, there's banks giving away all these houses. They come in, they go, yeah, let's do this. Normal rents are $1,500 a month in that area. Well, shoot, let's let's mark it down to 1,400 because we got such a smoking deal on this place, and we'll get a ton of applicants and we'll pick the best. And that is exactly what happened. And these funds get totally hammered, or these investors have been around, and that's what's about to happen. It's going to take some time to do that, but Richard makes an absolutely great point. They're going to get totally destroyed because they have to maintain their bills. And think about it. Some of these people are still having, these investors are having to deal with not only the issue with keeping rents at a certain point because of how much they paid for the house, because the house value had went up before it dropped. But also, if some of these landlords include like utilities, they're having to deal with the inflation of utilities as well. So it's absolutely catastrophic, or it's going to be. So I wanted to bring that point to you guys because you're seeing a mass exodus of real estate agents right now. You are seeing interest rates go up, which is going to be bad for refinances and for home prices. And you're also about to see a whole new style of investor come in. And that's what I'm excited about, because I want to lead that charge of showing people how to buy houses, no money down, when we're going in and negotiating with banks. And we are picking up properties for pennies on the dollar. So I really do think there's going to be a huge revival in real estate again because of a crash. And so I get excited. I mean, that's what we all want to do. We want to be prepared, not scared. That's what Ninja Nation's all about. If that kind of stuff scares you, you definitely don't want to be a part of this channel. If it does get you excited, saving up money, being prepared, and taking advantage of, everybody else that laughed at you when they thought you were crazy because you said, hey, it's an overheated market. Well, then hit the subscribe button and help me spread the message, because I think we're going to absolutely crush it, guys. So with that being said, I thank you so much for your time. The Economic Ninja is out.